A good afternoon, a good afternoon. So today it's first the topic or the startup course. We are so everyone that is watching this video, you're very welcome for joining to the winners part. So today we are going to look onto what we call um, to deep understand what is forex trading. So forex trading we are going to start up learning what is it. Okay, so what is it, what is this? So uh forex trading is or even in bracket it can be also called it can be termed too as foreign exchange foreign exchange trading. You can also call it that. So what is this? It is and it and is forex trading is the buying sorry the involvement of buying and selling of currencies of currencies on a global on a global market on a global market on a global market. And what is this global market? This global market is uh is under an OTC. I'm gonna explain each by each. So just relax. So it is this global market is under OTC. We shall look also what an OTC market is. Okay, we are going to look at an OTC market is. So forex trading is traded on a global market, and it's a decentralized and the full form of OTC. It's a decentralized 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 over the counter over the counter it is decentralized over the counter. So in uh, in FX so if I talk about FX, it is forex exchange or forex trading. So in forex the OTC refers to a decentralized to a decentralized market where financial financial instruments or assets including currencies metals including currencies, metals, are metals and stocks and stocks. And stocks are traded directly between two parties without the involvement of a central exchange or intermediary or an intermediary. So what does this, let me put it on. So I said it is over on the global market, and the global market it is decentralized over the OTC. So without an intermediary, so when you are on OTC market, it is like an intermediary where you don't need any third party to come into to carry out any transaction. So what do I mean here is, for example, if you have your dollar, if you have your dollar, you want to go and exchange it into your currency, into your own currency. So me, I'm gonna use mine, which is a Ugandan currency. So if I want to change into Ugandan currency, I'll go to the bank. So the bank works as the intermediary or a central exchange, which gets quotes or which gets prices from the OTC, from the market, from the other side, okay. So for example, this is it. It's me here, okay. I'm the one standing here in red, okay, and the bank is the one here in black, okay, and the market, the real market, it is here in let me say blue, okay. So me I have let me say my Uganda shillings, but I want dollars. So let me say this is me. I have the UDX, which let me put X, and this one stands for dollar. Let me put Y. Okay, so this is the Y. Okay, so if I want to get the dollar, which is Y, I can't access it directly. I'll have to come to the bank, which is Z. Okay, so I have to bring in my money to the Z, which is the bank. Then the bank goes to the what? To the Y, which is the market. Then after that, they already the money is of course they get the quotes from here. Then of course this one, the Y gives in the bank, and the bank also does what? Gives into me. Okay, which is in our case not. Okay, so for us, what do? We don't need the bank. Okay, we don't need to be to the bank. We are going to exchange our currencies directly. Okay, we are going to exchange it directly. So instead of us going to the bank, the OTC, we don't need an intermediary. We shall just go directly to the market. We shall just go directly to the market to exchange. Okay, we shall just go directly to the market to exchange. We buy or sell currencies directly from the market. So that's the meaning of OTC. And another thing, it is accessible to everywhere. But we are going to also look into that. So that's the meaning of we don't need, it is between two parties. We don't need any third party or an intermediary there to be to carry out transactions in between. So let's look at X-sticks characteristics or X-sticks. I'm gonna use this X-sticks or characteristics of an OTC market of an OTC market of an OTC market. So of course OTC mean OTC, over the counter market, you get it. So I don't want you to confuse up things. Characteristics of an OTC market. Number one, sorry, let me move these. Okay, no central exchange, no central exchange or physical location. Or so that means that for you, since it has no physical location, since we don't have any physical location, like the bank, of course the third parties, they are banks, the exchange areas. So if they are not there, of course, it has no physical location. You can access it online basically. So you can be anywhere, either in flying the plane, whether in trade, whether at home, whether you're walking on your phone, in a taxi, in a bus, anywhere, whether you're in mines, where anywhere, as long as you can access the internet, you can see it. So it doesn't have any physical location. You can access it anywhere. So that's why it is very good. Remember, it is between two parties, and since you just joined up the course, with time you're going to understand what I'm talking about. So we also have another characteristics. It is directly between between buyers and sellers. It's directly between buyers uh, and sellers, okay, or two parties. Like the way I explained the first phrase, that you don't need an intermediary like the bank or like the bank or any third party there. It is either you the buyer and the other side the seller, or you the seller and the other side the buyer. So that is it. Because when, for example, when you go to buy something, the one you're buying from is selling to you, so it is between you the buyer and the seller, you get. So it can't happen without buyers and sellers. So when you're buying, the other side is selling. So when you're selling, the other side is buying. Another thing is no standardization. No standardization. Trades are custom. So there are no standards. Whether you're rich or poor, it is yours. Okay, you can do it. All you need is getting a skill, and everything that you take, it is customized depending on what you want. You get. So everybody does their own thing. Okay, it doesn't need you to be too rich or too poor or too wide. Anyway you are, as long as you have the skill, as long as you have the necessities to access it, you're free to access it and have a look at it. and also it doesn't require you to be with huge lots of money. Okay, it's the penny you have is what you can trade, depending on what, on brokerages, the acceptance of brokerages, and that minimum deposit, maximum, and also leverage, and what, leverage, and loading. So that's what can hinder you. But that's also another course, another lesson, another day, of you understand the leverage and all that, because they are also into it. So we also have another thing, share. We do also have the last point, counterparty risk. Counterparty risk. Okay. Risk by default. Risk by default by the other the other other party, by the by oh sorry, what is it, by the other party. So you risk what you can afford to lose, and the risk is by default. Okay, you risk what you can lose. So it is it is up to you of what you want to risk. Okay, so it is not customized that it is not it is not like has a standard that this is what you have to risk. No, it is a risk by default by the other party. You understand? So that is it. So another thing, what we are going to look at, you heard me talking about assets. So we are going to look into these assets. Number one, we do have one of the assets called currency, currency pair. You have what you call currency pair. Okay, we are going to also read currency pair. We understand deeper onto it. Okay, so a currency pair. What is a currency pair? Okay, a currency pair is the quotation. The quotation. The quotation of two currencies. Currencies. Two currencies with the value of one currency. I'm gonna explain that how it is being quoted with the value of another currency being quoted against the other. Okay, I'm gonna explain that deep in the next session. So what does this? This represents. It represents the exchange. Represent the exchange rate between the two currencies. So they quote it. So we are going to understand deeper about the currency quotations in the next in a few. Again, we are going to understand it. So it won't be that, it is not that hard. It's most simplest simplest move. Okay, it's not that hard. So they quote a currency a currency against the other to get the exchange what? The exchange rate. So what is quoting, of which we are going to do what? We understand in a few. Oh, okay. Sorry about that. So, and in the currency pairs, we do have several uh, currency collection. So you're going to look also into collection. So we do have a collection of a currency of a currency pair. Okay, in baskets. Okay, so when I talk about baskets, you're going to understand. So one, we do have major pairs. We do have major pairs. So when I talk about a basket is this. We do have major pairs. Under a basket of major pairs, we do have we do have we do have, and these are mostly traded. We do have GBP USD. We do have also USD CHF. We do also have USD card. We also do have Euro USD. So these pairs are mostly traded, most liquid. We shall understand about liquid, most liquid, and widely traded. People trade it a lot, and widely traded. And widely traded. Okay, so under the basket of major pairs, we have also looked at those. Okay, so we do also have another basket under minor pairs. These are less liquid, but still popular. They are less liquid, but they are popular. Less liquid, but popular. So namely, we do have Euro GBP. Okay, we do have GBP, GBP, JPY. We also have Euro JPY. So I'm giving in a few, but there are very many pairs that are there. Okay, Audi JPY. So these are less liquid, but they are also known and they are traded. Okay, so if I mean less liquid, doesn't mean that that they move lower. Sometimes they move very fast, but they are just less liquid. Okay, but with time we shall understand more deep. So deep. We shall understand so 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 deep. So let me come back here. So another one, we do have what we call exotic pairs. We do have what we call exotic pairs. Okay, these are less liquid and high risk. Less liquid, they don't move a lot and you risk a lot. Less liquid and high risk. Um, we do have under it we do have USD USDMXN. We do have also what we call Euro uh, CNY, China Yen, China, is it CHY? C Euro gave CHF, yeah, CHF, not CNY. It is CHF. We also have USD, INR, Indian rupee. Okay, we do also have another. We do have also cross pairs. Okay, non-USD pairs. Okay, non-USD pairs. Under this, we do have so for it, if it doesn't have any USD word cross, so we do have Euro JPY, Euro JPY, GBP AUD. Yeah, we do have CHF, JPY. We do have CAD, CHF. So such pairs, they are non-USD. It is not quoted against USD. So for example, you see it doesn't have any USD with it. Okay, those are the exotic. So let's look at also a component of a currency pair. Component of a currency pair. Of a currency pair. Okay. Component of a currency pair. Oh, sorry. Component of a currency pair. Uh, we do have. It should. Sorry. It should have a base currency. It should have the following: a base currency, should have a base currency, also known as the transaction currency. This is the first currency in a pair. Okay, we should also have a quote currency. A good pair has to be with a quote currency, also known as the counter currency. The second currency in a pair. Okay, so hopefully let's link up in the next session. We shall go one by one. So let me stop here. we shall go again in another session. We understand how these things work. So have a good afternoon. Let's link up in another session. Thank you.